Yo, what's up? I'm going to talk about a quick little break of structure video. Okay, going over trends, going over continuations, retraces. If this is not familiar terminology to you, I hopefully will be doing this to clarify all that. Okay, so let's see, let's take this out. So okay, in a all right. Okay, this is an uptrend. Okay, simple. We got a high, we got a low. Now we got a higher high, a higher low, higher high, higher low, higher high, higher low, higher high. Okay, forget about that. So the trend, when it's like this, it's a bullish trend. Okay, picture their fighting styles with the little horns and their little horns. How do they fight? Right? How do they fight? The little bulls. They fight striking up. Right? They fight striking up. So that means the bulls go up. Okay. On the other hand, the bears go down. Right? So we got a high, got a low, lower high, lower low, lower high, lower low, lower high, lower low, so on. And bears, right? They attack how? How do bears attack? Bears strike down with their paws. Okay? And with every trend, high or low, there is what is called a continuation. This is a continuation. This is a continuation. This is a continuation. For these parts of the trend, right? That means the overall trend is bullish, right? What the fuck? The overall trend is bullish. That means it's going up like a bull. And then when it's going down, the overall trend is bearish like a bear, striking. So we got that out of the way. Next is in each trend, there's two things, right? There's continuations and then there's a retrace. It's a continuation and a retrace. Continuation, retrace. So what that means, it's, think of it continuing the trend. It's not going to just go straight up and then straight down. No, it's going to continue. Then up here it's continuing. Then up here it's continuing. And then what these are called, these moves downwards, these moves down, these moves down, right? These moves down, the higher highs on the higher lows, I'm sorry, the higher lows on a bullish trend is the move down would be called a retrace. It's retracing down in price, okay, for it to continue up. So same thing with a bearish market. It's continuing down, retraces up, continues down, retraces up, continuation, retrace, continuation, and so on and so forth, right? So again, continuation, retrace, continuation, retrace, continuation, retrace, continuation. So when we enter into trades, we want to enter at continuations, continuations, continuation, continuations. Okay, so the best way to spot that is break of structure. Okay, it's not really going to be this simple looking compared to this. This might be overwhelming because there's little trends in the bigger trend that reverses higher time frame retraces for the overall bigger trend, you know, so it's just so much going on. But we're going to simplify it with this, and that in turn will at least let you know what a break of structure is, because this took me a while to figure out, and I want to simplify it the way I know how. Okay, so in a bearish trend, the break of structure to the downside to start the bullish trend, right, would technically need the trend would technically need the low, not this low, would need the low to get closed under. So with a bullish trend, you monitor the lows, right? That's a low, that's a low, that's a low. You want to monitor the lows. Of course, you're looking at the highs as well, but monitoring the lows will tell you where the bearish trend is, where the break of structure will be. So once this low gets broken under, this area is a break of structure. Okay, that's simple as that. But okay, and then for it to be a change of structure in the other direction, we monitor. Once it changed, you're monitoring the highs now. The highs, right? So if this moves up higher and the candle closes above this high, the most recent high, then we can safely say, okay, it's going to change structure. So what I need to see, is this. Okay, coming into the market, and I'm just using the hourly for now. I'm not gonna switch around, whatever. So right now, what do we see on the trade? From this corner of the chart to that corner of the chart, that is what? Bull or bear? Bull. Okay. So once we know what trend we're in, we know what trend we're looking for. So we can start to um, look at the bigger moves, right? So this would be a high, this would be a low, um, this could be the high, this could be a low, right? Then this could be a high, this could be a low, that's a high, that's a low, that's a low, right? Just go out, mark highs and lows on your chart, right? Highs and lows, highs and lows, highs and lows. How do you know they're highs and lows? Simple. Okay, you need two things. You need the candle to be one color and another candle to be a different color, and it needs to be closed under. So this could be a bigger overall high and low on the trends, right? Like like the 4 hour or whatever. This can be a different thing, a different different structure, but we're monitoring the most recent. So say with this. So right now, what's the most recent low? It would be this one. This low on this wick candle. Why? Because um, there hasn't been a high printed yet, right? So this can go down forever, and then the market crashes, whatever, right? We need we need a high candle. See, it's a high right there. It's a high right here on this candle. It's a high, and then that's a low, and then this is the high. So we need to be monitoring. Next candle, okay. Okay, next candle on these setups. What is it doing here? So it made a low, made another high, and then um, made a low here. But we're monitoring. Remember the most recent low, and what happened here that's different from a lot of these. This candle clearly, clearly, clearly closes below this low, right? So so this would be the low, okay, for this little move, and then this would be the high for that move. This candle is the low and the high, okay, because you should know how candles open and candles close. The blue candles are technically like the green candle, so it opens here, comes up, closes here, okay, and it dances in between the wicks. Same thing here, but the opposite. It opens on top, closes at the bottom. Opens on top, closes at the bottom. Opens on top, closes. Okay, so that basics is basics. So the break of structure, am I looking at here? These lows, this low, this low. No, I'm not looking at any other low. I'm looking at the most recent low. Okay, monitoring the most recent low. Look, New York Open area. It closed around then, New York Open. Okay, so what can we say? Okay, maybe the sellers want to sell. It could be a retrace. You zoom out, and you see, okay, you know, um, the trend might change. See here, it opened, it came down, it came right back up to around that area, and was just lollygagging here. Still went down and took out these lows, right? With that wick, came to that wick, and look, came and shot down more, right? But that's when you know, okay, from it shooting up and up and up and up. Now, with that closure right there, compared to anywhere else besides something like this, like here it closed, yeah, and look, it did go low, but then again, you monitor the highs for an uptrend. This is a high, low, recent high. You monitor this. Well, this would be actually the recent high because there's no down candle printed next to this one. It's on the left side, yeah, but that's for this, right? Because like it came down all the way here, and came up all the way here, came down all the way there, came up, didn't quite go all the way up, just blew past that. So off that high, it closed above that. What did it do? It shot up, came back to that area we were looking at, came down, came up the high. We're monitoring the high or the lows because we're on the uptrend. We're on a bull trend. We're looking for the bearish trend to start. So what happens? Change of structure happens here. Closes below that, and then it goes. Right? Is it gonna go automatic? No, but that's just kind of a signal of like, hey, like I kind of don't need to go up here anymore. Kind of don't need to go higher anymore. So it just starts going, transacts more business here. Look, it was just accumulating during the market, during New York Open, Asia, London, and again the next day in New York session, it dumped, nasty, dumped for a day, for 2 days, and then the next New York Open came up, 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 you know. So in different time frames, you'll see the same thing. I'm just trying to teach you real world examples of the breaker structures, right? So these gaps always get filled. Remember that. So it comes up, higher high, low, high, low. What happens here? Breaks under the low, comes, has a reaction. Because people see this. Just regular everyday people, from order flow traders to just technical analysis traders to fucking news traders. They see this, it reacts, comes back up, takes out the orders here, comes down, and just keeps going down, right? So, again, this gap, boom, failed. Took a while, but it's not really too much of a. You don't have. It's gonna fill it eventually, right? But it doesn't need it. It tried, came back, did what it had to do, then it went up. That's another video, but um, look, the high was here, closed above the high here, and what did it do? It just kept going up, kept going up. Okay, now see how it's going down. Right here, the low. Where's the low? Most recent low here. So high, low. Wait, let's see. Low. No, it doesn't break yet until over here. Makes a high, makes a low. Here makes a high here. Makes a low here. High, low. Technically broke on this one. On this candle, this blue one. What happens after that? Boom. Actually came down drastically, came up, down. It kind of held this area, and then it dumped down. So it was just lollygagging for all of Asia, London, and then once New York opened, it dumped. Right, and then over here, see the high. This is low, high to the blue candle. It comes down to this low, and then what happens once it breaks this high? It moves up, but it doesn't. It's still. It could be a retrace to continue the move, right? Then look here, kind of consolidates in this area. When did it break the structure here? Right? Are you monitoring this high? Nah. Look at all this. So they have a low here, a high here, low here. So we'll monitor this high. because that's the most recent high. There's no low here. The next low that comes is over here. So it's already fucking gone. But monitor that high. What happens? Came up. This candle here closes above the high. And what happens? Shoots up. Boom. Targets this area. Whatever. This kind of general area. It didn't need to go all the way up here. A retrace. This was just like a retrace for the bigger bullish trend. Right? Came down here. Shot down. Again. Are you monitoring this high? No. Are you monitoring this high? No. You monitor most recent high for this little leg up. So monitor here. Made a low. You wait for this to break. And it breaks, and what happens? It comes up. Right? So you can do this. Look. Low. Right? It's a small down wick. Low. Where's the high? The high's kind of here too. See, the high's right here. High. And this is kind of a weird area, but just keep your eye on it. The high, see, then it just shoots up off of that. Comes up here. Comes up here. High. And then this is a low you're still looking at. What happens here? It closes below this recent low. And it goes down. But you have to remember, not all markets are going to move. Higher highs, higher lows, higher highs, higher lows. Sometimes it just consolidates. Left to right, left to right. And look what it's doing. Consolidated, consolidated, consolidate. I'm just moving my. Now it moved. Now it moved out of this trend. So see, it's consolidating. It's trying. They're attempting. It's moving. It's making moves, but it's kind of in this general area, right? And it breaks out of this area when? Here. When does it start? Right here, around here, because it doesn't dip back down this area. So comes down. You're monitoring 8. So high, low, high, shot up, low. But let's see where the breaker structure is here. So from it going low, high, low, lower high, higher equal low, lower higher high, lower low. Here, we'll monitor here. This would be the breaker structure. So it goes up from this low. From this low, it goes up. Watch, let me see. So from this low, makes a high, makes a higher low, and we're on a bearish trend. We're monitoring the highs, right? So we're monitoring the most recent high at this time. Makes another low, and what happens? High breaks, and when it breaks that, when that candle closes above that recent high, it shoots up, right? Shoots up. So that's kind of the gist of it. You can just go here, like do kind of what I'm doing. Go candle by candle, mark it out. So that's a low, that's a high. That's a low, that's a high, that's a low, that's a high, that's a low. Breaks that. It's a high, it's a low, it's a low, high, low, high, low, high. See, this is like low, the breaker structure here, but it's not really doing. It's kind of consolidating. There's kind of a small bet bullish trend. Um, but here it kind of breaks below this low right here. All right, with this candle and this low here, it goes, and what happens? You see, it dips down. So you can kind of go through the chart like that, just kind of follow it as much as you can, as much as you want to, just to keep that sword sharp, right? Once you dump down to the lower time frames, it's the same kind of thing, but a smaller time frame, right? They're everywhere. There are probably more of it here, more little trends in the bigger overall trend. So you have to be careful. Look what's happening here. It's like a lot of consolidation, right? But also in the consolidation, comes down, makes a high, makes a low, makes a lower high, makes a higher low. We could already erase that because that's kind of what we're following here. After that, we see that. What happens there? Candle closes above that. Does that mean, oh, we're in a bullish trend now? It can, but it just means we broke structure, right? Right? Can the price come all the way back down? Yeah, eventually. Can it never come back down and just keep going up forever? Yeah, it can too. So you have to kind of be mindful of that, right? So right now, today is 419. We reached new all-time highs, and then looks like we're testing previous all-time highs. So what this gap means, from what I've heard, is the market is closed on the weekends, right? Opens back up 1800 Sunday for the futures market. What I've heard is that price basically is moved down there. So yeah, I just wanted to end that on that note. It's kind of a longer video of just me yapping, talking, but I hope it helps, and I hope have a green week, green month, green year. Let's go. Peace.